Okay, so this is the review for exam 2 that covers chapters 4, 5, and 6. And let's get into it. So for problem 1, the first thing on problem 1, it should be called, it says the adjusted trial balance below is for Rich Company at the end of its fiscal year. And it says Rich Company trial balance. That should say adjusted trial balance, okay? Should say adjusted trial balance. So Rich Company adjusted trial balance March 31st, 2019, and it gives you the whole adjusted trial balance. Remember, when you have your problem, you will always be working from the adjusted trial balance. So if they give you a regular trial balance or an adjusted trial balance, when you are closing the books, you're always, the very last thing you do is close the books. So that comes after the adjustments. So it's the adjusted trial balance. So this says prepare the closing entries for the temporary accounts at March 31st. So if we look at the list here I have on Excel, the first thing you do is your revenues. The second thing you do are your expenses. The third thing you do are your retained earnings, and the retained earnings is the difference between the revenue and expenses, okay? And then the fourth thing you do are your dividends. And two things to remember, or three things to remember here. One, everything but dividends runs through income summary account, okay? Two, dividends run directly to retained earnings. And three, the income summary account starts and ends at 0. Okay, so it should never have a balance in it. And the thing about that is that you don't do a T account for it, but you could always do a T account on scratch paper if you weren't sure. All right, so we're going to prepare the closing entries for the temporary accounts at March 31st. So first thing we do is revenues. So we're going to look through the list of the adjusted trial balance, and we're looking for revenues. So if we go down and we look at this, we're going to see that we have service revenue, $39,600, and then we have rent revenue, $14,400. Okay, so in order to do this, we have to go back to what we learned in chapter 2. Revenues have a credit balance, so in order to get rid of them, we have to debit them, right? So we are going to debit service revenue, $39,600. We're going to debit rent revenue, $14,400. And then we are going to credit income summary, $54,000, which is the total of the two. And I have a question, what about unearned revenue? Unearned revenue is a liability. If you do not provide the service, you owe that back to your customer, so it's not a revenue, it's a liability. And we do not close out liability or asset accounts, only the temporary accounts. Okay, so that's the first entry. The next thing we're going to do in the list are the expenses. So what we're going to do is we're going to go down that list and we're just going to look for all the expenses. So if we go down the list, well, first of all, we need to know this. First of all, we need to know that expenses have a debit balance. So in order to get rid of them, we have to credit them, right? So we don't know what the total of income summary is yet. Okay, we're going to be debiting income summary and we're going to be crediting all the expense accounts. All right. So if we go down here and we look at this, we see salaries expense is $20,100. So in order to get rid of that, we're going to credit salaries and expense. Now you'll notice that I put the income summary box there. I just didn't fill it in yet. Okay. You do the debit before the credit, but we don't know what the total is yet. Okay. The next expense we have is rent expense. And so we're going to credit rent expense $12,000 to clear that out. The next expense is office supplies expense. We're going to credit that $1,800 to clear that out. The next expense is insurance expense for $1,500. We're going to credit that to clear that out. And the next expense is depreciation expense for a total of $1,200. So we're going to credit that to clear that out. Now that's all of our expenses. And then what we're going to do is we're going to add all of those expenses up to find out how much we have to debit to income summary. So the total of all the expenses is $36,600. So we're going to debit income summary, $36,600, and we're going to credit all of the individual expenses. Okay. So first we do the revenues. Second, this is the second, we did the expenses. Now we need to do the retained earnings. And the retained earnings is the difference between what comes in, revenue, what goes out, the expenses, right? 36,600, right? So we've got revenue less expenses, right? So revenue minus expenses in this problem, we got 54,000 minus 36,600. Our retained earnings are $17,400. Okay. So in order to make retained earnings go up, we have to credit it, right? Because it has a credit balance. So we're going to debit income summary, $17,400, and we're going to credit retained earnings, $17,400. Okay. All right. The next thing we're going to do is the dividends, and your problem may or may not have dividends, and the dividends go directly to retained earnings. So dividends have a debit balance. So in order to clear it out, we have to credit it, right? So we're going to debit retained earnings, $3,800, and we're going to credit dividends, $3,800. All right. That's to clear out our dividends, and dividends are the ones you do last. So that's the total of that problem. And let me just kind of scroll here so I can get it all in one. There we go. Okay, so that's everything in one for problem 1 on exam 2 review.